How you doing, man? So as you can see from the title, equilibrium today. Equilibrium, aka a discount price. I'd say the easiest concept of them all. Like after the highs and lows, obviously you gotta know what is a high and low, but it's a really easy concept. And let me just show you one page of my ebook. As you can see right here, one page. Equilibrium. This is just what does it mean? The next page is about how you can use it and find it. Okay, equilibrium. What is equilibrium? Equilibrium is a retracement tool showing you where the market movers are likely to buy or sell again. What does that mean? Who are the market movers? Banks and institutions. The ones with big ass capital. Like the banks, they ain't trading, like they ain't moving the market. They need to fill orders, right? Take people out from the market. They have these massive orders that needs to get filled, and equilibrium is like a discount where they can buy or sell again. Let's say they just swept liquidity, okay, meaning they filled massive orders, millions of orders, right? What happens then? They swept liquidity. However, these big market movers, they want a better price. If they are looking to buy, they are looking for a cheaper price. They want to do the old strategy in the book. They buy low, sell high. That's the basic of the basic. But they use that because they have the capital for that. They are moving millions and millions, hundreds of millions, I'd say. After they swept liquidity or whatever, there are equilibrium areas, aka the discount areas. They go there and they continue direction. Similar to fair value gap and order blocks, right? Okay, it's a retracement tool. Now we know that. So yeah, if they're looking to sell, they are looking for a higher price. And in short term, equilibrium is used to find a discount in the market. Okay, and here are some examples. What does it look like? You take it from the low to high, and you go back. The price goes back to it, and then continues the direction, similar to fair value gap, right? And if we're in a downtrend, take from high to low, because obviously if it's going down, you're gonna take from this high to this low, and it comes back to this high. I hope you understand that, and then continue this direction. Okay. But yeah, let me just show you in the charts. We can show you the charts. By the way, New York Stock Exchange opened, but there are news, so I'm not gonna live trade yet. Okay, that's what's up. That's what's fine. Okay, equilibrium. Now that we know the basics, what does it mean? First of all, what tool are you gonna use? We're gonna use this tool right here. Copy the settings, coordinates, whatever. All these, copy this. Because you're gonna need this one. Okay. The basics of the basics. Equilibrium. Okay. A high. This is a uptrend. Okay. Uptrend. If we're in an uptrend, hold on. If we're in an uptrend, this is the high, this is the low. On an uptrend, you take it from the low to the high. Okay? Like this. And here's the 50%. What do you want? What does equilibrium like? The ideal would be like this. Goes down, takes the discount, these big banks and whatever, these market movers, they take the discount and continue this direction. Okay? That is just a retracement tool, just like fair value gap and order block. But this is like super easy stuff, okay? In the downtrend, lower lows, lower highs, right? In a downtrend, you take it from the low. You take it from the high to the low. And as you can see from here perfectly, it's just, this would be ideal. From high to low, leaves this. This could technically be a imbalance as well, right? But high to low leaves this equilibrium here. This 50% takes it out, continuous direction. Okay. Okay, you understand that now? Just hold on. Just like I told you in my ebook. By the way, if you want to get access to this ebook, like full like in full access. Link in the description. Don't worry. But yeah, that's about equilibrium, like in this. Okay, uptrend. Remember this: uptrend, low to high, downtrend, high to low. Okay. All right. Now in charts, let's go on the daily time frame, right? A daily time frame. As you can see, especially in daily, the like high time frames, obviously they hold more power. Like I always say, this is the high. What's the most recent low? This is the low. Gets swept. Discount comes back to it. Continuous direction. Okay, and what happens here? We sweep liquidity, right? Like I told you, this is a retracement tool. We swept liquidity from high to low, like a retracement. Boom, right here to the low, swept, continues down, whatsoever. Okay, let me just show you how do I use the equilibrium. Okay, I use it really, I don't even use it that often. I use it to get a better entry for me. Okay, some people use it in a really high, obviously sometimes in a hard time frame like this. Okay, you can take the equilibrium like this. This is, like this. Hold on, let's go to 4 hour. There's broke structure there. Let me show you. You can take the equilibrium also from the lowest low to the highest high, right? Like this. And this is the discount. We're in an uptrend. When it comes back, you may take, but I don't take it purely off of equilibrium because it's just equilibrium, right? It's a discount. I use it as, like I told you, retracement. For example, we get a not that good entry like this. Let's say I come late into the session. Okay, I come late. Pause. Okay, we got a break of structure right here. Okay, break of structure. I arrive late, like here. Then I'm like, damn, I missed the trade. Okay, it goes up, it goes up, it goes up. Take the equilibrium, would be like this. Okay, it doesn't yet. Take it from here. Okay, you still have the stop loss below here. And when it comes to this area, you can enter. This is a kind of bad example, but I hope you understand because this is just a discount, right? A discount. You want it to come back here and take out. But what happened here? What also happened here? We get a fill in the disorder block. Also, and this equilibrium, it is fairly simple concept, but I don't use it that often. I'm be real with you guys. I don't use it that often because for me, I like to use order blocks and fair value gaps more often. I like them more. We get a sweep of liquidity right here. Straight structure broke. Bad entry, right? This is a bad entry. Look at this risk to reward. Look at this bad risk restore. Okay, what you're gonna do? Take from the high to the low. Gets the imbalance. But what also happens here? Fills this order block. That happens also. We also took out this imbalance right here. That's why I like more. That's why I like to use order blocks and fair value gaps more. Okay, this is for me. You can use this equilibrium, this discount also. This is also pretty good. But I'm not saying it's the best, but it's pretty good because it's the 50%. It's a discount, and I use it to get better entries. Okay, for like in this case, I would enter when it comes to this, hits it, takes the discount above here, boom, continuous direction. Now let's go back into the hard time frames, where you can also use equilibrium. Okay. For example, we break structure right here. Okay, This is a break of structure. This is also an imbalance. This break structure right here. We break structure on the 4 hour right here. Broke structure. Also have the imbalance that needs to get filled. Fills it. But what do we also have? From high to the low to this low also fills out this. But what also is here is this imbalance right here that doesn't completely get filled. But you gotta remember that the imbalance, it doesn't always need to fill that much because there are orders in there and it's an imbalance that needs to get filled. So, they take the most of it. And as you can see, it gets somehow filled. It continues this direction. Let's say on NASDAQ, we broke structure right here. This is a break of structure. High above this high. Closure to above this high. Okay? You don't want to enter like this. So what you do, you wait for the equilibrium from this high. And when it comes back, some may enter, but I wouldn't enter just purely off of that. Because here is also order blocks, fair value gaps. But as you saw right there, that imbalance is good, but it's not the best retracement for me. That's a personal question. But what was it? Remember, in an uptrend, you take it from the low to the high. Banks get a discount, they're happy, and they buy again. Downtrend, from the high to the low, banks get a discount and they're happy. Okay? So what do we need to remember? Equilibrium. It's a discount in the market because banks and institutions want to get the best price because they are greedy. Okay? What else? How does it work then? On an uptrend, you take equilibrium from the low to the high. On an uptrend, you take the equilibrium from the low to the high. Remember this. But on a downtrend, you take equilibrium from the high to the low. Makes sense, right? Because the banks, they want to sell high. So they take it from the high to the low. On an uptrend, they want to buy, but they want to buy low. So they take it from the low to the high. Comes back to the 50%, boom, continuous direction. Usually. That's why I like to use many confluences so I can increase the odds. You get me? So this is the uptrend from low to the high. On a downtrend from high, shit. What the fuck? Okay. On a downtrend from high to the low. These are the results. Boom and boom. That's the ideal of equilibrium. So what's the conclusion? Equilibrium is a retracement tool. It's a retracement tool. Retracement tool is just like fair value gap and order block. Remember that. And that's about it. That's about equilibriums. It's that simple. What do you need to know? The equilibrium. You need to know how to spot highs and lows in the market. And that's it. But remember, do not use only equilibrium to find a setup that liquidity sweep. That's the best one. That's the main one, I'd say. Liquidity sweep, obviously know your bias. Are you on an uptrend or a downtrend? Break of structure, when you're gonna enter? Break of structure, confirmation that it's gonna flip. Break of structure is a confirmation to your entry. Hey man, thank you for watching, man. That's about equilibrium. Hey man, if you want to join my Discord, I'll leave the description in the bio. So, peace.